Now for the big fun one. We're going to talk about crypto. And crypto is, I'm personally invested in crypto. So full disclosure, I'm invested in stocks and I'm invested in crypto. I'm more invested in crypto than I am in stocks right now. And my reasoning is I started so late in investing. I need something that's going to make more money in a shorter time period. So I'm more risky right now in my investments. Why would I invest in crypto over stocks? Can you shut that door? So a good return on stocks, a good return is 7 to 8% a year. Amazing returns is like 12% a year. Last year, investing in crypto, I made a 50% profit. All right. Not at 8%. I made it 50% in a bear market. Okay. So, and I'm not buying and selling. That's just buying and holding. Researching, buying things that I think have solid value and just holding on. The basic rule of investing, and I know this is going to sound stupid, but Raoul Pal says this, and I think it's a phrase that most people actually just need to hear and go, okay, because it's easy to understand. You ready? The basic rule of investing is this: number go up. Like buy it and just hold it while it goes up. The biggest mistake investors make is buying, selling for a quick profit, and then missing out on all the opportunity of its increase going forward, okay? Because there are always people out there that are going to tell you, it's getting ready to crash, it's getting ready to crash, it's going to crash, it's going to crash. We've been literally in a bear market since the end of 2021 till now. And all through this, if you follow any financial stuff, there's groups of people that are just like, we're at the top. It's going to crash. I mean, it's 90% down from where it was. It's going to crash. You're going to lose everything and all this. All right. That is always the way. Even in a bear market, there are people telling you it's going lower. It's going lower. It's going lower. There were people when Bitcoin was went from 66, whatever, 67 down to 30,000. There were people like, it's going to 10. Don't buy Bitcoin. It's going to 10. It's going to 10. And then it went back up to 70. Right. So, so there's always naysayers, and you've got to tune all of that out. Don't pay attention to all that. You do your research on understanding something concept wise. You do your research on the particular project. Know what you are going to buy. Don't ever just buy stuff because someone else said to buy it. You know what it is. You do the research. You're responsible for your own money. Okay. And then buy when you feel like it's a good value. And then just hold it while the number go up, okay? And just hold it. All right, so that I don't mean hold it forever. There's a point at which you need to take profits, and we'll talk about profit taking later. But to understand crypto, I'm going to start at the beginning, way back in 2008. Okay. In 2008, there was a white paper that was released by an anonymous person. He's named Satoshi. It's a pseudonym, obviously. And he releases this white paper for this new asset class called Bitcoin. And Bitcoin, the idea of Bitcoin is that it is a decentralized currency. No government controls it. And the reason the white paper talks about the reason that he released this is because of the crash in 2008, and that governments and central banks manipulate money, and people don't actually have control, and they're depreciating the value of it, and people don't have control of their own money. The government controls all this, and people should have the right to have self-control of their money, self-custody and self-determination, And, you know, the value shouldn't be based on the government just randomly deciding to print copious amounts, that people should know up front whether this is a static amount that will never go up or down, or whether it inflates over time, right? But it's a predetermined thing, and the people should have a right to vote. If it's going to change, the people have the right to vote on it changing, okay? This is concepts that are introduced by Satoshi originally. And so each Bitcoin, there are 21 million Bitcoin in this, we'll call it a vault, let's say, okay? 21 million. And in order to get the Bitcoin, you have to run a cryptographic program on your computer, okay, that solves an equation. And if you solve the equation, you're rewarded with a certain amount of Bitcoin, okay? That process is called proof of work. You're solving this equation and you're verifying this equation, and the vault, so to speak, rewards you with the amount of Bitcoin it's programmed to release when that equation is solved, okay? Each Bitcoin can be broken down into 18 decimal points. So it can, like one Bitcoin could be 1.18 zeros. Okay. If you get all the way out to 18, the 18th zero, and you get a 1 right there, that is called a Satoshi, taken from this right there. So one Bitcoin actually has lots and lots of Satoshis, right, to make it up. And there will only ever be 21 million Bitcoin, ever. Once the final one is mined, there's no more to mine. And that's what there is. Unlike the US dollar, that can be printed into infinity. Okay? And so this is why people say, there's value. No one can add to that number. The government can't make more Bitcoin. It's fixed. And whoever owns that Bitcoin owns it. It's theirs. They own the key to it, right? If you put it on your cold wallet, like I talked about, or hot wallet, you own the keys. It's yours, and it represents one Bitcoin, and no one else can have that one unless you sell it to them. Now, here's the problem. That's the promise of Bitcoin. Here's the problem with Bitcoin. It's still clunky, okay? It's revolutionary in its concept, but it was 2008 and the technology was clunky still in 2008. So to buy and sell Bitcoin as an individual, as a regular person, it takes 10, 20 minutes or more for the transaction to finalize, okay? So that time length that it takes for it to finalize makes it rather slow for usage of commerce and things like this. All right, it's very slow in that regard. And so it was originally idea that it was going to be a monetary system that people would use to exchange money, but it's so slow that it's like, well, it really doesn't work. We need something that moves faster than that. So this became what's known as cryptocurrency. It's considered a currency. It's considered a commodity, okay, even by the SEC. And it's considered a store of value, like buying gold and so forth. So it's like digital gold. Now, since that time, there are other projects that have come out that have kind of tried to solve the problem of how cumbersome and clunky Bitcoin operates. And they intend to operate as currencies also. And there's quite a few of them. And most of these if they're legitimate projects, they may be decentralized, but their founders have identified themselves and said, we're the ones that did it. Here's why, and here's what our goal in trying to accomplish is. But along with that, there came a whole bunch of what are called meme coins. Okay. And meme coins means that they are, they're kind of like a cartoonish version of Bitcoin. Okay. The original meme coin, most people would consider to be Dogecoin. If you've heard of Dogecoin, it had the little picture of the dog, right? The dog there, and by the way, that dog died last week. The Doge dog died last week, or this week, I mean. But Dogecoin, whereas Bitcoin has a total value, a total locked number of 21 million, Dogecoin literally has an unlimited supply. They print like millions and millions of them every day. But there's so many people in the Doge community that believe in Doge and are going to hold on to Doge, that it's what drives the value of Dogecoin is the number of people that are buying it and holding it, hoping it'll go to the moon. Their goal is just to the moon. That's what you hear in crypto, to the moon. Doge to the moon, Shiba Inu to the moon, this meme coin to the moon. And now, you've got Pepe, which is a cartoon character, and you've got Trump meme coins, and you've got not issued by Donald Trump, they're just somebody made it, Turbo Turtle and various different things like this. And here's the thing about meme coins. There are people that make bukus of money, tons of money with meme coins. I do not mess with meme coins at all, because meme coins go up very rapidly and they fall very rapidly. And because you never know who's behind them, they experience a lot of what's called a rug pull, meaning they launch this, they pump it out, and they pay people to promote it, and everybody goes, it's the next huge I'm going to make millions with this meme. They put all their money into it, and then the founders who held like 80% of it back dump it all on the community. They make millions, and everyone else, loses their money, and that has happened a lot in this sector. People can make money. I personally, as an investor, am not gambling. And to me, meme coins is like the casino of crypto. Okay, so I do not mess with meme coins in any fashion. That's my personal, opinion here. Okay. The next, what I consider legitimate use of crypto, came out, and it is primarily represented in Ethereum, or ETH is what kind of the biggest name in that sector is. Ethereum just had an ETF approved this past week. Okay, there's a Bitcoin ETFs now, and now there's Ethereum ETFs. Ethereum doesn't work on proof of work; it works on proof of stake. And essentially, they want you to buy Ethereum and put it in a vault to where it sits, and it secures the network having this in there. And they're going to pay you to put it in that vault, a percentage, okay, for the right for companies to use that vault and operate on the Ethereum network. All right, now this is where we really get into a better understanding of this. Bitcoin introduced a concept that was revolutionary called blockchain. Okay, and blockchain is an immutable, dispersed record. of transactions. And so each block represents a certain amount of information. How many transactions occurred, what the transactions were, where they went from who to who, and those type of things, okay? And so it makes a block, and the next block links to it, which is the idea of blockchain, okay? And each block links to the previous block, and it forms this chain of information that someone could go back and they could look all the way back to the beginning transaction, and they could see every transaction publicly, okay? They could see every transaction that was ever made, and they could know exactly where it's going. The idea was for this to be public, and I probably should have put the word public there, public. But the idea was that the government couldn't hide things in this way. And everything's transparent, everything's open, but everything is also unchangeable. And the reason it's unchangeable is because Bitcoin and Ethereum and these others, they're not on one central computer. It's not one computer that keeps all these records. It's every computer or every phone that connects to the system literally keeps the record. And you couldn't go back and change the record, one record, without going to every one of those computers and phones that hold it and changing them all. You'd have to change all the computers and phones in order to change the record. It's not possible, in other words. It's impossible to go back and alter it. It's immutable. That's where the idea is, okay? It's unchanging, okay? Because it's not possible to get all of them together and figure out how to change all of them at once. It won't happen. So this idea was originally with Bitcoin, and some people, Vitalik and a few others, went, hey, wait a minute. If that is public and transparent and immutable and all of that and dispersed, and we could figure out how to make that usable for all kinds of other data, not just Bitcoin data, but all kinds of data, then what we could do is we could put a layer of security on the internet that doesn't currently exist. You ever get hacked, get viruses, all that type of stuff? How many times in this past year have you gotten a notice from some account that your account data was stolen and now it's out on the dark web and they're selling your information, right? That happens like literally all the time, okay? And this issue of the internet itself being unsecured is what crypto is actually focused on solving after Bitcoin now, okay? And so they said, if we could use this idea of blockchain, and we could take the idea there and make it usable for businesses, to where businesses could put their data on the blockchain and it would be secured and no one could take it and steal it, or they couldn't change it, right? Then this would make the internet more secure. The basic idea is that blockchain is Internet 2.0, okay? And often what you hear now, this was Ethereum, this was back in 2012-ish timeframe, okay? That's the concept, Web 2.0. And then there's kind of this new thing they're saying, Web 3.0, and this is like even more secure and usable than the previous versions, right? And that's what they're talking about now, Web 3.0. Okay, so basically they took this idea and they said, how can we make this usable for businesses? And they introduced what are called smart contracts. And basically this says that when you can take this Ethereum, this one Ethereum, and you can add information to it. So I'm going to say it's information linked to the coin. You can put all this information on it. Information could come in any size and shape or whatever. It doesn't matter. You're adding, and you're saying this contract says that this token, this coin, will do X when Y and Z happen, kind of thing. Okay, so it's like a guarantee that of functionality, and it has all this information added into it to make it work like it's supposed to. All right, so that being the case, now they were able to go to businesses and they were able to say, hey, you want your data secure, right? So you can use this system to secure your data. And along with that, a lot of other people said, yeah, we could use this in different ways. So you've got companies like Ripple, which developed XRP. But they developed XRP not to operate as a business protocol like Ethereum does, but to operate as a banking protocol. They said, man, it takes so long to transfer money from bank to bank or from banks here to banks overseas. That takes a long time. And so we're going to program our currency, our crypto blockchain, to where it'll transfer large amounts of money quickly and cheaply, and we'll get the banks to sign on to transfer money between banks. And then, you know, that's the framework for this XRP. And so it's focused on just banks. There's another one called Stellar. These are early on companies, okay? And Stellar has the token, coin XLM. And they said, Ripple's focused on banks to banks, but what about person to person? Because there's a lot of people here in the US that want to send money to their family down in Central America, right? And so Ripple went to MoneyGram. And MoneyGram, that was using the old traditional banking rails, they said, hey, how much does it cost for you to transfer money from one MoneyGram station, Western Union or something, to another Western Union? Well, we got to go through the banking system. What if you didn't have to go through the banking system? What if you went through our system? And so MoneyGram actually runs on blockchain now. And it costs very little for them to send money down to their family, but they're doing it through this MoneyGram rail. MoneyGram's still collecting large fees, but they're not using the banking industry anymore. They're paying a penny or something, and it's happening instantaneous almost. I mean, within a second or a couple seconds. And so they're collecting these fees from people, but they're using crypto, and so they increase their profits a lot to transfer this money person to person. Ripple, bank to bank, institution to institution. Stellar, person to person. And those are just a couple companies that have seen the power of this technology and said, we can make a business use for this, right? And so they've gone and they've specialized. So the idea, some people go, oh, everything runs on Bitcoin. No, it doesn't. Bitcoin was the original concept. It's like saying, do we still use the same cotton gin that we used when it was first invented? Okay, no, because it was slow and they figured out better ways to do it, faster ways to do it, and all that type of stuff. Well, Bitcoin's like the original cotton gin. Doesn't mean it has no value. It's just been turned into kind of a store of value, as you might call it. And so it's kind of the OG original thing out there. But all the new stuff is focused on trying to solve, outside of meme coins, okay? It's trying to solve business problems. How do we store data? Right now, we have all of our data on centralized servers. We have it at Amazon Web Service or Oracle Web Service. But that's centralized. Someone could hack that web service and steal our data. What if this data was decentralized? They couldn't get to all of it. And so there are cryptos that are designed to decentralize. And basically, if you own this and you set your computer right there up and you connect it to their system, you say you can use X amount of my storage space for data, and they're going to pay you to use your storage. And now it's spread over millions of computers. It's not hackable in that same fashion because It's not in one central place, and you earn money just like Amazon Web Services earning money. You earn the money instead of Amazon. Does that make sense? It's dispersed. So there's how many different applications could there be? Well, first of all, you could say, well, how many different businesses are there? Right? Coca-Cola sells soft drinks, but they don't sell car parts, right? So there could be a crypto that just services the beverage industry or advertising industry or this industry or that industry, banking, person-to-person transfer. There's all of these. But then additionally, as with any new technology creates new opportunities. So there's things that maybe they haven't even thought of yet that, we could do this with it or this with it. Now, one of those things that they're doing with it is artificial intelligence. Crypto is hugely intertwined with the growth of artificial intelligence. And so it's a way to gather data and knowledge and in a decentralized manner. And part of the problem with like ChatGPT is it's an artificial intelligence, but it only gathers information from, let's say, Facebook, all right? Can you imagine how wrong the information is in ChatGPT if it's only gathering it from Facebook or maybe from Google? It's gathering all this information from Google. But think about how many dumb websites there are. That's its source of information. So artificial intelligence, if it's decentralized and it will identify where the information came from, it can gather the same information from Google, Facebook, X, Encyclopedia Britannica, the Mayo Clinic, and all of these, and it can compile all of it together into one thing, whereas, Meta is only one, it's using its own information because it owns it, right? So there's that. Then there's the ideas of like your personal data, your medical records, your financial records, those type of things. There are companies that are focused on creating crypto tokens that would be that you would own data privacy. You would put all your personal data on them, and you would own your data, and you wouldn't be giving it to Facebook and X and Instagram, because notice on Facebook, you get on there, you give them all your information, you put all your information on it. Guess who owns that information? Facebook owns it, and they are selling ads to companies, and that's what the ads that show up in your Facebook feed are, them selling your information to people that want to advertise to you. You're the product on Facebook. Okay? You're the product. And they're making money off of you putting your information there. That's why it's very dangerous, especially for young people, because they don't understand that, and they put information on there that they should never put out in public. Okay? But there's companies that are focused on making data private, and maybe you would own your medical records. You would own them, and you would give a doctor permission to view your medical records. Okay, instead of the doctor owning your medical records, you would own them. And then if you wanted to sell the right to look at a certain aspect of your medical records to a research company, you could collect money for them to see your medical records, and you make money on your information instead of someone else making money on your information, selling your data. Okay, so that's a use case for crypto. Are you getting the concept? The idea is everything that's physical right now, your medical records, until a couple of years ago, they were all literally on a paper chart in a file drawer in an office somewhere. Okay, but those same medical records can be put into a digital format and recorded on these crypto tokens, smart contracts, and now it's over here on the information, and it can be siloed in a private place, okay, where you have control of it. You put it on your hardware wallet, and you own it, and you have control of it, and you can rent it out if you want to, or you can just keep it private and no one see it, right? So yeah.
So same way with like a deed to a house or a title.
Yes, so I was getting ready to get in that. Exactly. So no, that's fine, because that's what's called an NFT, non-fungible token. NFT, non-fungible meaning changeable token. Fungible means to be able to be changed. So what is fixing to happen? This is actually why crypto's about to just explode. Okay. What's fixing to happen, what's already started happening, is they are taking records of deeds of right to ownership of physical, tangible items, and they're putting them on the blockchain in the form of an NFT. Up till now, NFTs have been like junk art, basically. Okay, they've been little images and whatnot. People buy and sell them, and oh, it's computer art, and it's crypto art, and someone put it on there, and it's tied to that token, and people buy and sell it like they would regular artwork, in theory. But that was all just really for the bigger scheme of things. That was kind of just trial run to see how it would work. The real end game for this is Jason, his title and abstract to his house are put on a non-fungible token, and he keeps it in his personal wallet, okay? And or until he pays for it, the bank keeps it, right? And he's paying on it. But his house is kind of rated in this way because maybe it's representing as one crypto and there's 18 decimals there, right? And he's buying a point whatever each time he makes his payment until it's paid for, and then he gets that NFT transferred to him. But now, from that point forward, we don't have to do title work and abstract searches because it's all literally recorded on that digital record. It's all recorded there. And so if I want to sell it, I don't have to go through all the title work and abstracts and all that type of stuff. I just sell the NFT. All the data is already linked to it, and going forward, it has it all. Okay, your car title, your insurance, your medical records, your house deed, and all that type of stuff. Anything you would buy, if you bought a fancy watch, it might be linked to an NFT, and that ownership of it is there. Yes.
So, and I don't want to be a conspiracy theorist, but in the last 4 or 5 or maybe 7 years, you've seen a lot more people having their houses stolen.
Yeah.
By deeds, and so
yeah,
I'm just trying to figure out how they're pushing. So everybody knows this, or do you think that's just because we never heard of it 15, 20 years?
It's always happened a little bit. Well, old westerns were kind of built on the idea of stealing a deed, so it's not a new concept.
Right.
And it probably they'll try and figure out a way to do it under the new system too. I mean, but I don't think it's a conspiracy that in that fashion to push this along. But it does. The idea, generally speaking, is it eliminates the damageable, destroyable paper record, right? And it makes it easier to move. But it also, and this is the big factor, this is really what they're trying to do, it makes illiquid assets liquid. A house is an illiquid asset. You either own it or you don't own it. But what if you could take that house and you could say, I'm going to make my house, my NFT, I'm going to sell 0.00001s, 18 out, of essentially shares of my house, okay? And I'm going to sell this, and as buy and sell basically rights to my house, and maybe I sell 59% of my house, or if I'm 49% of my house, I still own controlling interest of my house, but I made that money on my house, and some other investor says, yeah, I'd be willing to do that at some point. Maybe I can buy controlling interest in the house, and then I'll own the house and I'll collect rent or something like that. Apartment complexes, houses, all of that type of stuff. It's literally making to where anybody could buy and sell things on a very liquid basis, okay? And it takes the value of land, houses, from a very difficult value to monetize and transfer to a very liquid part of the economy, okay? And that's really what it's about. It's about infusing liquidity. Everything is about liquidity, guys. You got to understand that. We started off with that, everything is about liquidity. And so that's where they're going. Okay. Now, I'm just going to give you my philosophy. I personally do not buy meme coins. I am invested in utility coins. And essentially what I look at crypto, I look at it as the next stock market. Okay. And theoretically, they're not shares of the company. They are a commodity that the company uses. They're the product. Okay. It's like, let's say Coca-Cola. Okay. It's not buying shares of the company of Coca-Cola. It's like buying the rights to their Coke bottles. And so they say, hey, there's a demand for Coke bottles over there, right? If you go over here, they're paying $5 for Coke bottles. So I bought the Coke bottles at a quarter maybe, and I think if there's only so many Coke bottles, and if people want Coke, they're going to be willing to pay more for it down the road. This is the idea of investing here. Okay. At the same time, I can deposit into certain places, most of what I own, utility tokens, because they want to secure the network so that the network functions in a safe and secure way, and they're willing to pay me a percentage to stake my commodity with them, and I earn a percentage and I appreciate in value over time. Okay. So it's like a commodities market more than a stock market in that sense. But that concept of there's a limited supply, right? As demand increases, the supply doesn't increase. So what happens to it? Remember where we started? Supply, demand and supply. The value of it goes up because demand is increasing and supply stays the same or grows slower than the demand grows. Okay, and so the value goes up. Now, essentially, we're at a position where, and in the last segment here, I'm going to explain market cycles here a little bit, but we're at a position where we've been in a low bear market position and we're getting ready to go into a bull market phase for crypto in particular. Okay, meaning the prices are going to go up rapidly in the coming days and months. And so if you bought back here, then you're going to watch that go up, and your idea is, well, I'm going to decide when and how much I want to make on this, and I'm going to sell it at X whatever profit. Okay, or maybe I'm just going to hold on to this for the next 10 years. I think it's just it'll go up, it'll go down, it'll go up, it'll go down, but 10 years from now, it's going to be worth a lot more than it is right now. Okay, that's how most Bitcoin investors think about crypto. They're not thinking about buying and selling it in a short term. They're thinking about long term. It's going to go to $1 million someday, right? It may. I don't know if it will or not, but it may, as these ETFs buy it up and individuals don't sell, the value just keeps going up because there's a limited supply, right? So that's the investment concept. So I invest in what's called utility tokens, and that is that I look for the companies. I look at the company. They're selling this is a commodity. They're not actually selling it. They just made it out there and they're using it as a rail. They kind of control the rail. It's like the train tracks for or the train versus the whatever train company, right? And so train company is selling someone the right to ship their goods on their rails, okay, using those rails. That's what the commodity is, or the crypto is. So I research companies, and I look at the company or the project, and I say, what's it doing, right? What's the team behind it? Who is involved? Are they exposed so that if they pull their money out and everyone gets dumped on, their name is gone too, right? Their reputation's gone, and they go to jail because they committed fraud. Okay, and that's to me that's an important factor, because If they do that, they commit fraud. They are liable criminally, and they'll be put in jail. There's people in jail that have done that. But if there's no one knows who's behind it, then it's like, well, who's going to get in trouble if they dump it? That's where those rug pulls come in. So I researched the company, I researched the team, I researched the market they're working in. What is the potential of this market? What are they trying to solve? Who are they already working with, right? So like I don't invest in crypto that doesn't already have big businesses working with it. Okay, so if I see that, hey, this company is working with IBM and they've got a partnership with IBM to provide some service for IBM, or they're working with, Oracle, or they're working with Hewlett Packard. These are names that I know are substantial and are dependable. And if this company's working with them and they're contracted to do a service for them, then that means that there's a legitimacy there. Okay, they're using the crypto to perform that service, but the company separate from the crypto is kind of the one doing the service, and they're just using the crypto as the commodity to perform it, if that makes sense. Okay, I'll give you an example of a couple of these. Okay, XRP, I mentioned earlier, was developed by the company Ripple, and XRP is working with like 100 central banks across the world that they've already got contracts with to transfer money bank to bank. And so that XRP has a relatively low value. There's a large supply of it, relatively low value right now. It's like 52 cents, 53 cents, something like that. But regulations haven't kicked in yet. And when regulations kicked in and the banks are required to use this service that they're already starting and experimenting with, the old service goes away, the new service becomes where the value is, and the money being transferred, in theory, needs to be on a network that's not fluctuating high in value, but has a high value, because you're not talking about how I might send $20 to Brother TJ over here. When a bank is sending money, they may be sending $1 trillion, and you can't have a big fluctuation in that, and you can't send $1 trillion if there's not a good value in each token, if that makes sense. Okay, so in my view, at some point that's going to go up. How much is it going to go up? I don't know. I don't have a magic 8-ball, right? But is there value in what they're doing, and are they connected to people that have a legitimate use, and is the team trustworthy? Are they of note amongst the system? Okay, so I look at that and I go, yeah. Now, what might it go up to? Don't focus on the potential stupid numbers, okay? Because if you look at XRP, there's people who are like, it'll be $100,000 per XRP, and currently it's 52 cents. You go, could it be 100,000? It might be. I don't know. Bitcoin at one point was less than $1, right? At one point, a guy paid 10,000 Bitcoin to buy 2 pizzas. The anniversary of that was this past week. They call it Bitcoin Pizza Day, right? It was like $40 worth of Bitcoin, 10,000 of them. And now it's worth 70,000, 68,000, whatever it is today, okay? And so could XRP do that? It might. I don't know. I'm not saying it will. I don't know if it will. But I do know this. I believe that the business use of it means that someday it's going to be worth more than 52 cents. Does that make sense? So I think it's going to go up in value over time. And if it only went up to $5, that's a 10x of my money. In the stock market, to 10x my money with regular returns would take 40 or 50 years. Okay, that's a huge, and it's not very risky because it's a very established, solid company with a solid business plan that's using XRP as that. So you understand what I'm saying? Because people typically say, well, crypto is really risky. It is, because it's a new technology But at the same time, if you're watching and you're looking at these companies and you're understanding what they're doing and who they're working with and the people that are doing it, and you see all this and you do your research, it may not be quite as risky as you think. It certainly isn't any riskier in that regard than just picking a random company on the stock market to throw money into that you know nothing about, right? So there's that aspect. Okay, so that would be a company that you might, and I'm not recommending you buy it. Okay, so please understand, I'm not recommending you buy it, but I'm saying this is an example. There's a company called, or there's a token called ads, and that company focuses on advertising industry, and so they're actually tokenizing ads and ad sales, and so they that runs on their system, and their focus is exclusively on that area. Well, what's the ad industry worth? Is it value going to go up over time or down over time? Well, it's going to go up over time. And right now it's all old style, and it's moving to this new style. So if there's a company positioned to kind of overtake a lion's share or even just a portion of that and go up in value, that might be something you would concept-wise look at. Here's one that's a really interesting one. Trade finance. This would be the trade between that travels country to country, business to business, right? Currently, the entire World Trade Center runs on the English trade law model, and it's all paper documents, and it costs billions of dollars every year just to print the documents for the current trade model, right?
So with that, when you're talking about like the stock market, they have hours and they have a physical place, but the crypto is not that way.
Crypto's not that way. Crypto's 24/7.
Yeah, that's what I thought. It
Yeah.
doesn't matter what day of day
Yep.
you're in.
It trades all the time. All right, so on the trade thing though, there's companies that are focused exclusively on that market, and that's all they do. They wrote programs, or they wrote crypto that is designed specifically to work with the trade industry, business to business transfer of documentation and tracking and all of that type of stuff, right? These are companies like MNW and XDC, and that's their technical name is Zenfin. XDC is the token, and Morpheus Network is MNW. And so these companies, MNW is a Canadian company, XDC is a European company. And these companies are focused exclusively on that industry and trying to bring it into the digital age. Here's something to me that's just really important. The British Parliament, upon which the entire system runs on their law, they just passed new laws to upgrade everything to the digital formats. And guess where it's going to go? It's going to go on these networks that are focused on this. They're already working with these companies. They've already established relationships. They've just been establishing the relationship, waiting for the laws to catch up and regulation to be there to where the companies could safely say, 100% we're with you. Now all that value that was going into buying paper and shipping paper now all goes into the network. Okay, so billions of dollars flow into those networks when that officially goes live. Okay, there's one called TRAC, TRAC. It's Origin Trail, and Origin Trail. This is something that's kind of mind blowing. Currently is involved in tracing 40% of all imports into the U.S. already. They trace imports for Walmart, Target, JCPenney, Dillard's, all those type of companies. Okay, and they're already doing that. 40% of the entire market, but the value of the project is relatively low compared to what they're already doing. So it's one of those kind of, to me, it's like, yeah, that seems like that's worth a whole lot more value than what's in it. But the reason the value is where it's at is because is their official designation saying legally this should go forward. Well, that's all in process right now. Okay, so utility tokens are tokens that are issued by companies to do a specific job and work in a specific industry and help that industry to develop. But utility tokens aren't the ones that are seeing the big money gains up to this point in crypto. What's seeing big money gains is meme coins. It's people who are just like, I'm going to make $1 million in Dogecoin and maybe they will, but it's kind of like the casino thing. And regulation is going to wipe the casino out. Okay, regulation is going to eliminate the casino, but what's going to be left? The legitimate companies that are doing legitimate service for businesses. Okay, and when you look at crypto, you're looking at this idea of all of this potential market that's transferring from the old market to the new market, and all that money is going to flow in. So currently the total crypto market is $2 trillion. The entire crypto market that people talk so much about, the whole market is currently worth less than NVIDIA. One company. The whole market is worth less than Tesla. One company. Okay. Bitcoin, all of Bitcoin is worth less than Apple. One company. Okay. But these are companies. And remember back in the 1980s when there was no NVIDIA, Apple, there was no Tesla. Those are now trillion-dollar companies. Why? Because they capitalized on new technology, the internet. The internet came along. There was no Amazon before the internet. Amazon was produced because of the internet, right? And what was Amazon at first? It was a bookstore. That's what it was. It was a bookstore. And he put it online and figured out how to code it to where, people could sell more than just books. But that's all it was. It was an old style bookstore, but because of the internet, it became a multi-billion-dollar company, right? And that's what's going to happen with these companies. They're going to be the next Apples and Amazons and Microsofts and all of that, because it's the next level of technology beyond Web 2. I'm not saying that Microsoft and Amazon are going to go away. I guarantee they're going to try and fit in, right, and capitalize on this. Just like General Motors didn't go away when we invented airplanes, right? Or, rocket ships going to the moon. Or like 3M that makes tape didn't go away because we invented super glue, right? I mean, it still exists. Good companies find a way to continue on and adapt. But new companies experience the most explosive potential growth, okay? So if you're talking about growth of markets and you can compare it to a race, okay, crypto industry is the fastest person in the race right now because it's the newest technology and all the old companies are going to rush to get into it. And so right now it's weird. It's a weird time because this has really never happened before except for the dot-com boom. When these companies were coming out and average people could buy a share of a speculative technology, right? And if you would have put even $100 into Microsoft at the early days, or $100 into Amazon when it was still a really early technology, and people are like, I don't know about this .com stuff. I think it's all going to go away. Well, some of it did, right? That's why you got to really research the company. But if you would have put $100 into Microsoft at that early stage, you'd be a millionaire now. That's absurd to think about, but if you just held on to it, you'd be a millionaire. That's what's getting ready to happen in crypto. Okay, if you understand it from a business model sense. Okay, all right. Any questions about what crypto is? I've explained already how to get an account. I mentioned a couple companies. That is not a recommendation to buy those. Please understand. I was just trying to give illustrations of things. But I'm not making a recommendation to buy any particular crypto or any particular stock or anything like that. You do your own research. But I'm trying to explain the concept and the model of the market, if you will. Right? Yes.
Just to summarize that, utility token then is a crypto-based
Yes.
where individual companies issue
As a commodity.
commodity. I'm still trying to just wrap my idea around where's the crypto usage. Okay, here's a company, one of these you mentioned. So you're able to buy tokens,
Right.
utility tokens,
Right.
but that token is on the crypto system.
It is on their system and it has an actual use. Companies would actually use that. So as companies start using it, they need to buy that token to use the system. Okay, it's like the ticket on the
So I was
system.
trying to think of, Bitcoin, and I was trying to think these tokens are kind of like another,
It's a different style, but it's it's the similar idea
basically a Bitcoin, but a specific use.
with a specific use. Right, that's correct. There's one other term that is an important term in this whole industry, and it's distributed ledger technology, DLT. And DLT is essentially the overlay of crypto. It's like the operating system for your computer. Okay, here's a computer down here. It probably runs on Windows, right? Okay. But then you also have like Microsoft, and all your desktop publishing would be in Microsoft, and you'd have Windows that is your operating system. So the DLT would be like the equivalent of a Windows program or a Microsoft that controls a large amount of programs underneath it. Okay. And distributed ledgers are something that you all probably have used and didn't even realize it. But let me give you for instance, you ever used Google Sheets or Google Docs? Ever have someone send you a Google Doc? And it's a DLT, it's a distributed ledger, okay? Meaning that they share the ability for you to read and edit it, okay? And they have to grant permission for you to use it. But once you have permission, you can make changes and they can see the changes you make, and they can make changes and you can see the changes they make. And you're both on you're making changes to the same document, but from different computers at different places. That's a distributed ledger, okay? So within the crypto realm, the distributed ledgers, DLTs, are like the operating systems of crypto that will link a bunch of these systems together. Does that make sense? So it would link together the crypto that's working in advertising with another crypto that's working in trade, and if they needed to communicate, this one might not be able to communicate directly with that one on its own, so it would connect to the digital ledger and they could both communicate through there. It's kind of like the interoperable. That's a big word in crypto, interoperability, and DLTs are the interoperability layer of crypto. Okay. Yep.
When you say you research those tokens and see what companies are using them on those utilities, how do you find that information? Who is using it?
So I use, I use an app called CoinGecko, but there's also one called CoinMarket. I use CoinGecko, and CoinGecko has a list of all these different cryptos, and I can click on them, and I can see the price, but I can also click on, let's see, I'm going to click on BNB. Okay, that's just in the top here. It tells me the price and all that. Over here, it tells me what it actually is. This is under info, and I can click on their website, and on their website, they'll have their white paper. That is their use case and tokenomics and what their roadmap and all that, what they're doing and where they're going and who they're focused on and who their partners are. And I can research it that way. And then also on CoinGecko, I can click on markets over here, and it tells me all the different places I could buy and sell that particular token. So CoinGecko is what I use to do a lot of research. I find it there, and I read about it. I look at their links, all right, and I go to their website and I download their white paper. I read their white paper, I look at their people that started it and run the company side of it, right? And research it that way. Yes.
Okay, so just so I'm clear, the ultimate goal of the cryptocurrency for Satoshi is so that it becomes currency.
That's his ultimate. That was his
So-
ultimate goal.
It's currency that does something. So like,
In Satoshi's vision, not necessarily that it does anything. It just exists outside the government system.
Mhm.
So it's the money. It's currency for the people. That was his concept. That the people control, not the governments. Now that was his vision, but crypto industry is much, much bigger and broader than that. And what's going to bring real value to the crypto industry is actually the business uses of when businesses go, wow, that will make what we are trying to do faster, easier, more secure, and all of that. And businesses are invested in it as a technology use.
so you said that it was slow when it began. There's some point that updated.
Not Bitcoin. Bitcoin hasn't updated, but new cryptos that have come out, these new projects I was talking about, they don't run on Bitcoin. They're their own networks. Okay, and so yes, they are many of them much faster.
But it's still part of.
It's not part of Bitcoin. It's not part of Bitcoin.
Okay.
Bitcoin is a part of crypto as a whole.
Okay.
It's like if we said, okay, retail. Is all retail part of Walmart? No, Walmart's part of retail. Bitcoin's part of crypto.
So the Bitcoin would be part of the currency, or the crypto would be the currency. So you understand what I'm saying?
Neither.
Neither.
Okay. Bitcoin is its own thing under the umbrella of crypto. Crypto is the concept. It's like saying Kleenex. It's the concept. Okay. Bitcoin is one use of the concept of crypto. Ethereum is a completely different thing under the same umbrella, but they're not directly tied together at all.
So what is Bitcoin?
It's a code.
Just the code. Okay. That's what originally you had to decipher it. Okay.
Right.
I'll keep processing.
Okay. I know it's complicated. I hope I've broken it down as simple as can be. It's complicated. It takes time to understand. It really does.
Was Bitcoin, was it the first?
It was the first.
Yeah, that's why.
And that's why most people associate crypto as Bitcoin. It's not. It's just like, it's the first.
It's just what started it.
It's, yeah. Yes. Okay.
So if you look at the big picture, they're
Yeah.
talking about countries doing away with monetary value.
Yes.
So you see where I'm coming with?
Yeah. So what they're going to do, and this is already going on, they're going to develop what's called central bank digital currencies. Now, that will be where the central bank of that country will digitize all of their money and use it. Now, it sounds scary, but remember I told you when we talked about what money is in the very beginning of this class, that 97% of all money already is digital. Only 3% of money is physical. Okay, so all they're really talking about is digitizing the last 3% in reality. Okay, but the fearful thing about central bank digital currencies, the thing people are afraid of, is that the government programs in the smart contracts of the currency that you can only spend your money at X, Y, or Z place, right? And you can only spend so much of it, and you can't spend it if the government doesn't approve of it, and that type of thing. And so that's what people are afraid of. So this week there was a law passed here by the House. It hasn't officially passed, but by the House, there was a law that the central bank could not issue any central bank digital currency. Do you all see that? The House passed this law. Well, here's the truth of that. If you read it, they can't pass a law, or they can't issue central bank digital currency that is not private, not a function, doesn't function just like cash does now. So the security and secrecy and privacy of cash has to be part of it. So they didn't actually forbid a central bank digital currency. They just said it can't have these restrictive, things. However, and I'm going to tell you, they are going to do it. They are going to issue a central bank digital currency that they'll say it operates just like cash. The government can't control it. The government can't track it today. But it will be changeable. Smart contracts in their original form on Ethereum are unchangeable originally, except for they're changing that. And there are already companies out there that have smart contracts that are what they call future-proof, meaning if something changes in the future, you can change the contract. That's what the central bank digital currency will be on. And it will come to where they do programming. And so the fear, and this is what I've always like, well, this is the system of the end times.
Yes.
It's absolutely true. It is the system of the end times. So should we be involved in it? Well, here's the thing. When the end times come, we're going to be gone. I mean, we believe in a pre-tribulation rapture. If for it to be what the end time system, you'd have to have the mark of the beast and so forth. The cryptocurrency itself isn't the mark of the beast. It's the rails they're going to use to enforce that you can't buy and sell without the mark of the beast. Sure. But for all of time, independent Baptists have been preaching on the pre-tribulation rapture, and not just since independent Baptists came along. It was called Chileanism before and whatnot. Okay, so what were they thinking would happen then? Did they stop using the monetary system because in the end the Antichrist was going to not let them buy and sell without having the mark of the beast? I mean, it's just a different form of what we've been doing all along. But I certainly think it makes it way easier for the false prophet and Antichrist and all that to implement not buying and selling.
And there's always been tools we've been concerned about. I can remember back in the 80s about the credit cards and debit cards.
Yep.
This is.
So it's just an advance of the system. To me, it's kind of exciting to know it's going to get easier and easier as we're going along. It could happen tomorrow. I mean, the system's in place. I could see where it happen tomorrow. And so anyway, that's that is a truth. Okay. Any other questions, real quick? We got to end this segment. If you didn't understand that, don't worry. Introduction of new concepts like this can be very difficult, okay? But go back and watch it. I can send you more information. You can do more research, or you can just get online and look up, information as well and do research like that, okay? All right, then let's take our last break. Let's only take 5 minutes because the last segment is actually a really long segment that we're going to cram into whatever time we have left.